Welcome, everybody. My name is Johnny at the Authors Guild, and the Authors Guild Foundation is pleased to make educational programming like this free and open to the public. But if you're a Guild member, you also get access to our lawyers and other member benefits. So if you're tuning in for the tax advice, but you're interested in more, check out authorsguild.org to learn about what we do. We like to do this webinar every year, almost every year. Taxes change over time, and taxes are very peculiar for freelancers and self-employed people, such as authors. Now, a lot of authors like to say their book is their baby, but I'm not sure that the IRS recognizes books as dependents, but I'll let our guest speaker provide real tax advice. We have Robert M. Pesce, partner in the Tax and Businesses Services Division of Marcum, LLC, and the national partner in charge of its accounting services group. He has an outstanding reputation for developing strong relationships with clients in the entertainment industry, as well as professional services firms. His ability for successfully working with actors, authors, and agencies led to his instrumental role in the founding of Marcum's Media and Entertainment Group. And Mr. Pesce serves as treasurer of the Authors Guild Foundation. Thank you for being here, Robert. I should say Erin Lowry, the host of our Money Matters series, had a last-minute issue where she couldn't be with us today, but no worries. I've got your questions from the audience and Erin's questions, and I'll have this conversation with Robert. First, I'll say that a lot of questions were about forming an LLC or S Corp, and a few years ago we did a webinar called Forming an Entity. You can search the Authors Guild site or YouTube and find that webinar that covers a lot of the nitty-gritty details of that, though we'll get into it a little bit here today. So Robert, do you have any opening remarks of some basics you want to cover first?
Well, just say thank you again for inviting me to do this. It wouldn't be a tax season without doing a webinar for the Authors Guild. So I'm glad to be here today, and I'm ready for some fun and some information with the people that care about this stuff. I'm happy to work with authors and give advice, and I'm ready to get started. So let's go.
All right. So what's the biggest mistake that you see authors making with regard to taxes, and how can it be corrected?
Well, the biggest mistake I see, and I'm surprised when I see it because it's just, to me, so important to remember this stuff. But I see authors, when I get a chance to talk to an author for the first time, I see that they sometimes forgot to deduct the commissions that they paid to the literary agent, or they didn't take advantage of something called the foreign tax credit. And I think both of those situations are because their accountant or they didn't know that the 1099 that they got from whoever paid them, whether it's the publisher or the literary agent, didn't have detail on it, and they didn't think to ask about the detail that's behind those numbers. They didn't understand what's behind the information on their 1099. So that's a big thing that I see more often than I expect. And the way you fix that is if you hopefully catch the error within 3 years of it happening, you can amend your tax return and correct it.
Got it. What if you didn't receive any income from writing last year?
Yeah, that's a question that people ask all the time, and sometimes it dovetails into the hobby loss rules. Is the IRS going to think that I'm not really a professional author and it's just a hobby? The business of being a self-employed author has lots of ups and downs and ebbs and flows. And it's possible there's a year where you'll have little or no income, and you'll still have expenses that are associated with a project that you're working on, or just in general, just being an active author, having to spend certain monies to keep your business going. It is a business. And so I would say that I definitely have done tax returns for authors when they have no income to report, and they still take the business expenses that are associated with their activity as a for-profit author. So yeah, you should do that. It's as long as it's not a permanent situation, you should do it.
Is there a limit on how many times or how many years in a row?
Yeah, well, so the IRS will sometimes suggest that an author or any kind of self-employed person who has a pattern of losses, but generally the IRS will assume that you're a for-profit business and not a hobby if you had a profit in at least 2 of 3 of the last 5 years. So if you have a profit in 3 of the last 5 years, you really don't have to worry about being questioned. But the questions you want to ask yourself, honestly, is, are you in the business to make a profit? Do you depend on the income from this activity? Have you made money in the past? And do you expect to have a profit in the future? If the answers to those questions are yes, then you really are an author. You are in a for-profit business. This is not just a hobby that you do to pass the time and let the government help you fund with tax deductions. It's a real business. So, but basically, if you have 2 years in a row of losses or no income, it's something to look at a little bit more carefully before you continue down that path.
I think a few people missed what you had said about the foreign tax credit at the beginning. You're talking about income from a foreign edition being published?
Yeah, right. So you have a book that's published abroad and the foreign publisher has to withhold foreign taxes from what they pay you. You might not see that on the 1099, you just see the net number. And it could be, instead of taking the deduction, instead of just paying taxes on the net that you received, you could take advantage of something called the foreign tax credit, which means that you don't take the deduction for the taxes that were taken out of your royalty or advance. Instead, you claim the money that they withheld as income, but then you take a credit against your federal income tax for the whole amount of tax that was paid to the foreign government. It generally results in a much better, lower federal tax outcome than not taking advantage of the credit.
One clarification going back to deductions without income. What about first-time authors? Is it possible to start taking expenses when you haven't published a book yet?
Yeah, so I'm talking to an author this week about they just got a nice advance this week, last week, but we're going to do a Schedule C for them as a self-employed author for 2023. They had no income as a writer, but they were working on this book that they finally got a deal on, and so we're gonna do their 2023 taxes with lots of expenses associated with the project, no income. There'll be a loss that they'll take advantage of and use against their other income or carry forward into 2024. But yeah, certainly, if there's something going on now that you spent money on in the past, you should take advantage of it.
All right, now thinking about business structure, what are the considerations for an author who has a full-time W-2 job? How can they separate the taxes of being an author from their traditional employment?
Well, ultimately, this all flows into a tax return, but it's important to separate the activities from an accounting and bookkeeping perspective. So if you're a self-employed author with a day job, I think it's really helpful to yourself and to whoever's helping you with your accounting and ultimately your tax return to have a separate bank account that is used exclusively to receive the income that you earn from writing and to be used to pay for all the expenses that you incur as a writer. And you should also have a separate credit card. It doesn't have to be a business credit card, but you have 3 credit cards in your wallet. You pick a color that you like for the business one, pick the gold one if you want. And that's the one that is business. Every time you use it, it's for a business expense associated with your work as a writer. This way, at the end of the year, when you're summarizing what happened expense-wise for yourself or for your accountant, you're not cherry picking what is business, what is not business. So segregate the accounting during the year so that when you have to figure out how to put it all together on a tax return, it's easy to do.
And it sounds like your book income and say freelance writing income, that can be lumped together.
I think so, yeah. Book income and freelance writing. So you're writing magazine articles and you're writing a novel or whatever. It's all one activity as a professional self-employed author. Yes.
Now, as I said at the beginning, we have a whole webinar on LLCs and S-Corps forming an entity. You can find that on youtube.com/Authors Guild or the resources section of the Authors Guild site. But to touch on it briefly, Robert, do you think writers should start an LLC to help manage taxes for their writing, freelance, and gig work?
Well, if you form an LLC and you're the only owner of the LLC, for tax purposes, the IRS considers the LLC to be basically you. It's the same thing as being a self-employed sole proprietor. There's no difference in the way the taxes are reported, calculated, or anything else. It's a distinction that maybe has some legal aspects, which I'm not really going to talk about because I'm not an attorney. But forming an LLC really makes no difference or has any effect on how your taxes are reported or their outcome. That being said, there are then steps beyond that situation that have significant, depending on how much money you make and how you structure it. An LLC can be taxed as a partnership, which is another story. And that kind of drifts into the question about forming an entity, being an S corporation, being a partnership, which we might talk about later on at the end of this, because in case we have some time, I want to save some time for that if we have time for it.
Okay. Someone asked if some clients pay me through the LLC and some don't, does that mess anything up?
That's a good question. So if you have an LLC, you may have also gotten a tax identification number. You might not have. You don't have to. But if you did, then you may have some income coming through to you in the name of your LLC in the tax ID number, and you may have some income coming into your name personally in your social security number. It all goes on the one Schedule C that you file with your 1040 as a self-employed author. It all goes in the same place. So I don't think it really makes a difference if you're worried about possibly weakening the potential legal protections that you have from an LLC. But that's something, again, that an attorney would want to look at more than an accountant. But it's from an accountant's perspective, consistency is preferred. So if you have an LLC, I would say that you should tell all the people that pay you that you are an LLC with whatever tax ID number you use for it, and ask them to make payment to you in the name of the LLC, just so that everything's consistent and the way you want it.
Great. Got plenty of questions coming in the Q&A. We will have some reserved time at the end for those, and so we might jump around a bit, but I'll try to stick with our game plan here. So tools that authors might use. What's the most appropriate software or other tool to keep
Well,
track
I mean,
of
accountants love QuickBooks, but that's sometimes you have to crawl before you walk. So I would just tell a self-employed author that wants to make their bookkeeping easy to understand and capture everything in a complete and organized way is, again, just have a separate bank account and a separate credit card for your activity as an author. And then at the end of the year, you can easily download that into Excel and sort categorize and sort it in a way that summarizes it pretty easily, so that you're putting things in the right categories and you're not missing anything. You want to have a complete story, and you want to have it categorized properly. But if you really have the abilities to look at, we use Quicken or QuickBooks, that's really the most popular software for most people who are self-employed.
Is there an income level or level of complexity at which an author should get a professional to do their taxes instead of using the software?
That's a really good question. I thought about that this morning, and there's so many different ways of answering it. But I think the best answer I came up with is, if you find yourself needing to pay estimated taxes on a quarterly basis, that's a signal that you need to have an accountant to help you with that, to make sure that you do it the right way, take advantage of the rules of how much you're supposed to pay and when you're supposed to pay it. And there's probably other things going on at that point that are going to reveal themselves if you work with a professional.
Would you recommend an accountant or CPA if your book deal is not big, let's say under 50 grand?
It really depends on, how you feel, how valuable you feel that service might be. Depending on where you are, you could possibly find a qualified accountant to help you with your accounting and taxes for a fee that's not too expensive, and the cost and benefits it makes sense. Being a New York City accountant, if an author called me and said that they made $35,000 as an author and they wanted to hire me as their accountant, I would indulge and have the conversation. But at some point we talk about price, and it might not make sense to them. But it really depends on the person, how busy you are, and how much you really, do you take the subway to work, or you take the taxi to work? It's like, how much do you want to take care of yourself, and how valuable is your time? It really depends. So that's my answer. It just really depends on how you feel and how you want to spend your time.
Just a few questions about the LLC kind of stuff. Are there specific tax benefits you can't get as just a self-employed person unless you have the LLC? Does the LLC bring any?
No, there's absolutely no difference. It is exactly the same. It's completely identical, whether you are an LLC or not. I'll tell you, say it a different way. I have clients, lots of clients that are authors. A few years ago, I worked with an author. It was like my third or fourth year working with them. And they said, "Oh, I'm an LLC. I've been an LLC since I hired you." Oh, really? Oh, no, is something wrong? No, doesn't matter. Tax return's exactly the same, whether they are an LLC or they're not an LLC, or you know they're an LLC or you don't know they're an LLC. It doesn't change anything.
What about a DBA, doing business as? Is there anything to know about that?
That's kind of a step in between being a sole proprietor that's not an LLC and an LLC. It's right in the middle. It's exactly the same. There's no difference from a tax perspective.
Someone asked, do you need to incorporate in some way before setting up a separate bank account? I guess to get a
You don't have to do that. No, you can set up a bank account in your name and just know that that account is used for one thing and one thing only, your business as a self-employed author.
Okay. Now about royalties. In what way are royalties treated differently from regular earned income like wages, salary?
Yeah. So once in a while, not very often, but once in a while, I'll get an email from somebody who contacted the Authors Guild and they gave them my name and number, and they'll say, "Hey, my accountant keeps telling me that I have to report my royalties on Schedule C. Royalties are not subject to self-employment tax. It's not earned income. It's Schedule E, rents and royalties." And the answer is, sorry, no. If you're a professional writer, the money that you earn, the advances and the royalties that you earn are subject to self-employment tax. It's earned income. It's taxed at regular tax rates, and it's also subject to self-employment tax, which is basically Social Security, Medicare. And so it's the same, almost the same as wages and commissions or consulting income.
So I was going to ask your thoughts on using the rent and royalties tax form. Is that Schedule E?
It is Schedule A. The only time I will, advise that it's appropriate to use Schedule A to report royalties that are received is if you inherited a royalty stream from somebody, you didn't create the work, you were never a published author, you're receiving the stream that came from somebody else that you were the beneficiary of. In that case, I would pick it up as Schedule E income, and there's no expenses against it because you're not a professional author. So you're paying straight income taxes on that money, but it's not subject to self-employment tax the way it would be if you were a sole proprietor or an active author in the business of writing.
Mm-hmm. Good time to mention the Authors Guild has a category of membership called Member at Large, and heirs and estate managers can join the Authors Guild in that way. Our guild members can pass their membership on to their literary heirs, and we can help with certain elements of that. Now, sales tax. Some of this is tough because it's interstate, multi-state issues, but a lot of authors are selling directly via online storefronts. And then, they're mailing the books out of their inventory. Are there must-do tax things unique to e-commerce that you can speak to? For example, sales tax to a multitude of states.
If you're selling, if your book sales are substantial, if you're really in the business of being a bookseller, and you're using one of these online platforms, they should have a system in place that helps you collect and remit the tax. And they should be doing it for you. But if you're going to a book fair and you bring a case of books with you and you sell 20 copies, you're supposed to collect sales tax on those books, and you're supposed to remit it to the state that you're selling the books into. I generally say to somebody who calls me about this, I say, ultimately, don't worry about it. But before we get to the don't worry about it, I give them the story about what you're supposed to do. And halfway through me explaining how it works, they say to me, really, do I have to do that? It's getting registered and filing returns and doing this for a one-time thing. It doesn't make any sense. But if you're in the regular practice of selling books, copies of books, if you use an online platform that has the sophistication to collect and remit the sales tax for you so that you're following the rules without having the burden of the complexities of compliance.
Okay. How do I handle sales tax for books sold at a book fair if I've already paid tax on a portion when I ordered them?
Right. Okay. So if you're going to bother with figuring out how to remit the sales tax on the books, you would register with the state that you sold the books in as a sales tax vendor, get a certificate of authority that allows you to collect the sales tax. So you're supposed to do that before you even start selling the books. Then you charge the sales tax on the books at the book fair that you sold the books at. Then you report the sales on the sales tax return, and then take a credit for the sales tax that you paid for the manufacturing, publishing of the books against the sales tax that you collected, and then you pay the difference to the state that you're reporting to.
Okay. So to be clear, if I sold a handful of my books in 2 different states, am I required to pay state tax, income tax? I think, Erin, then in both states.
So there's sales tax and there's income tax. So sales tax is collecting tax on the books that you sell and then remitting it to the state. Income tax is something else. Income tax is paying and reporting your income that you earned from all sources, whether it's selling a book or writing an article or collecting royalties or doing a consulting job. You report your total income as on an income tax return in the state that you live in, and of course in the United States. And technically, if you have a significant amount of income earned outside of the state that you reside in, then you would report that income in that state on a non-resident income tax return, pay whatever tax that is due on that income. And then in the state that you live in, your resident state, you would also report that income again. The tax gets calculated on that again, but you then take a credit on your resident state tax for the state that for the tax that you paid to the non-resident state that you volunteered to pay the taxes.
Wow. Okay. Yes, that makes sense.
You know, it's hard to do the right thing, but that's how you do it.
Right. Right. Well, on paying taxes, first, can you explain who needs to pay quarterly estimated taxes?
Okay. So the rules for paying quarterly estimated taxes are basically, there's a couple things. First, the government wants us to pay our taxes as we earn our income. So that's why if we're an employee, taxes are withheld from our pay every pay period. That's the way that we comply with paying as you go. If you're not an employee and you're earning income as a self-employed author, you're getting income every so often, every month or every quarter, where you're getting paid money on an uneven basis. But you're supposed to figure out the tax that would have been paid or will be payable on that income on a quarterly basis. So quarterly taxes are payable April 15th, June 15th, September 15th, and January 15th. So the quarter that's ending next week, March 31st, we'll be talking to our clients and seeing how much money they made for the first 3 months of the year, calculating the tax that could be due on that, and remitting that in a quarterly estimated tax payment by April 15th. So there's 2 ways to do it. You can figure out the tax that's on the income, and you can do that 4 times a year. That's time consuming, and if you're paying an accountant, it can be expensive. Once you get into the habit of doing this, there's another way of doing it. So you can either pay it as on a special calculation as you go, or you can follow another rule that says that you have to pay at least 110% of the tax that you had in the prior year. So if in 2023, your income tax was $12,000, and in 2024, you're doing better and you think your tax is going to be even more than that, instead of having to figure out the tax every quarter on your current income, you can pay 110% of $12,000. So that would be $3,300 a quarter instead of $3,000. It's $3,300, and you're satisfying the 110% rule. It doesn't require a lot of calculations. It's really easy. And then when you do your tax return next year, if your tax ended up being $15,000, you're a few dollars short, but you satisfy the requirement, you pay the tax that you owe, and there's no interest or penalty because you followed the 110% rule. So it's either figure it out as you go, or you can pay based on 110% of the prior year's tax.
Okay. Any tips for those wanting to pay the estimated tax if the income comes irregularly? Maybe they're paid twice a year, or they're getting installments in advance at different times.
Yeah, I mean, if you have an irregular revenue stream, if in the quarter that you have no or little income, then you're not going to pay estimated taxes because you don't have to, and you maybe you don't even have the money to do so. It depends on how you like to do things, but if you follow the rule I'm telling you, you would pay taxes. You'd figure the tax on the income you made and pay it on the dates that I said. And if you have no income, then you don't pay tax. If you do have income, you do pay tax.
And well, what's the benchmark of how much? I have a note about maybe 20% of income. Is that a
What
good
do you
estimate?
say, as a rate, a tax rate? Oh, yeah, rule of
To
thumb.
estimate your quarterly payments.
Yeah, it really depends on the tax bracket you're in. And the federal tax rates are progressive and have different levels. The highest federal tax rate is 37%. That's not applicable for somebody who's just starting out. If so, it really is, the answer is really specific to the situation you find yourself in. But for most of my clients, I tell them basically figure a third of what you make should be reserved for taxes. That's state taxes, city taxes if you're in the city of New York or other states that have a city tax, Social Security, Medicare, and of course federal tax. I figure if you budget a third of what you make for taxes, that's going to probably put you in a position to not be surprised when your accountant tells you that you owe X dollars with the first quarter.
Okay. Let's move on to deductions. A lot more fun. Is there a minimum threshold before deductions count? One person said they were told there was a $5,000 minimum of income before someone could write off expenses.
No, not really. I mean, there is something called the standard deduction. So we all, if we file our tax return, whether we're in business or not, whether we have a mortgage on our home or not, if you're married, the standard deduction for 2023 is $27,700. So if you're an author that made $8,000 and you have some business expenses, you can deduct those business expenses against the $8,000, but it's probably not going to matter much because if that's your only income and you're single, your standard deduction is $13,850. So your standard deduction is going to eat up whatever income you made anyway, and you're not going to have any federal or state taxes to pay. You might have some self-employment tax. Self-employment tax is Social Security and Medicare, and that's figured specifically on your income from writing. So in the example I just gave, if you're an $8,000 a year author with $3,000 expenses, you have a $5,000 profit. You won't pay state or federal taxes on that money, but you still have to pay Social Security on it. So there's no minimum threshold for deducting business expenses against your writing. I don't know where that $5,000 came from. It's not something I've ever heard of and shouldn't be applicable.
Okay. Now, what's the current reasonable test for deductions? For example, one author wrote in saying she's a personal essayist, and so it's hard to say there's a boundary between her life and work when she writes about her work. Other people have asked about, traveling to Europe on what might look like a vacation, but is truly part of their, their writing process.
Yeah, I mean, there's lots of writing on this. There's a concept of ordinary and necessary. So first, let's make sure the expense exists. So if the expense really exists, the question is it business or personal? There's some black and white, business or personal, and then there's some gray in the middle. So if I have a client that's writing a book that has some aspects of culture or history or architecture or anything that, let's say in Europe, and they take a trip to Europe to do some research and they bring their spouse with them and they ask me how much of this they can deduct on their business return, I'll basically ask them what they did, how many days they were there, what they did when they were there, how they spent the money when they're there, and then basically we talk about the airfare. I would say that the airfare is deductible for the person, but not for the spouse. I would talk about the hotel and think about, how much they spent at the hotel and the meals they spent money on and who they were with when they were there and what they did and got around. It's very subjective. You have to keep good records because in the unlikely event that you're audited, the IRS will look at things like travel, entertainment, and things like that, discretionary business expenses that blur the line between business and personal. Anybody who says that their whole life is business is going to probably have an issue with the IRS at some point.
Let's say that your trip it's clear cut. Your trip is part of writing a book. You're a travel writer. Is it pretty sure that you can deduct your hotel, your taxis?
Oh yeah,
meals?
that's different. You're a travel writer. That's a whole nother story. It's specific to being in the business of researching and exploring and learning, and it's the whole thing. It's everything. Yes.
Okay. Can a writer submit writing expenses in the tax year, those expenses were incurred prior to when the work sells. I think that kind of goes to what we
Yeah, we
talked
talked
about.
about that. That's yes. Yeah, you take the deductions in the year that you spent the money, even if the income doesn't match the same year.
Is it allowed to save that expense and count it as a deduction in a later year?
I haven't seen that in a long time, but some people might think about doing that. I would not advise to do that. I'd take if you spent money researching and writing and doing what you do as an author, take the deduction in the year you spent the money. Don't carry it forward. I don't think it's something that I haven't done that in years, and I don't even know if it's still allowed. Used to be allowed. It's called capitalizing expenses and then writing them off in the future year.
I see. Now, a few people asked a question about donating papers to a library, and Robert and I talked about this. It's a pretty peculiar situation with a lot of things to consider. So that's something someone would probably want to sit down with a tax advisor to
Yeah, you
discuss.
want to talk to your advisor about that. You want to talk to an attorney about that. You're going to need an appraiser to work with the institution that you're donating the papers with. And most institutions that motivate people to donate their manuscripts have a track record and a way of doing this in a way that's hopefully, proven and audit proof. And they should be the best resource for you on that question.
Do you have any tips for people who want to find an accountant who is going to have some level of knowledge, if not expertise, with authors' concerns? I imagine that might be hard if you're not in a state with the entertainment industry or something similar.
Well, I mean, Google and other search engines are great ways to find everything you need these days. I do get calls from people who said that they just typed in, accountants that work with authors, and my name pops up. Most people who are motivated to work with people that they feel they have a specialty in will market themselves in that way. Whether you're an author looking for an accountant that specializes in authors, or a construction person who wants an accountant that works with construction, use the search engines. Talk to your friends. I mean, most authors are friends with people in publishing, so talk to your friends and find out if they have somebody that they work with that's really good, and maybe they'll pass the name on to you. That's probably the best two ways to do it.
One more on deductions. If you're writing from a home office, do we get to deduct a portion of home utilities? And I know some people asked about the square footage of a home office.
Yeah.
Where does that
So the
stand?
rules for home office are written in a pretty specific way, and they're written for people who live in houses in suburban environments. So first you look at the total square footage of the house, and then you look at the square footage of the space that's designated exclusively for your work as a writer. So many people in this audience probably live in urban areas like New York City, and they're in apartments, and it's impossible to do anything exclusively in any part of the apartment. You're doing everything all over the place. So the word exclusively is something that is hard to sometimes comply with. But just to answer the question, the way the rules are written, you figure the space that you're using as an author, and you divide that by the total space of the home, and that's the percentage that you can use for home office deduction. And then you apply the home office expenses to that percentage. So utilities, rent, those are things that go, mortgage interest, real estate taxes, homeowners associations, landscaping, repairs, homeowners insurance, all these things that are for the maintenance of your home can be deducted as a home office deduction based on the percentage of the space you're using for your business as a writer.
Okay. Now on expenses, typical expenses for authors that may or may not be deductible. What about services like hiring a proofreader or editor?
Absolutely. Yeah, absolutely. That's definitely something. I thought someone was going to ask a question about Netflix subscriptions and theater tickets, and the answer for that is yes. I think anything like any kind of consumption of media, I think is important for you to be relevant as somebody who's writing as an artist for a living. And so without question, money that you spend on somebody who's helping you edit your book is definitely deductible as a necessary business expense as a successful author.
All right. So of course, things related to your business, website designer, social media assistant.
Yep.
classes and classes you might take about writing.
Education, public relations. Yeah, I mean, all these things, these are all good deductions. So what I tell people for the first time I work with them, I give them a list of expenses that I see most of my clients utilize and categorize their expenses. And then I tell them, if I didn't put that on the list, if you have an expense that doesn't fit the category I gave you, tell me about it. Don't make the decision yourself. If you spent the money and you think it's something to do with your business, put it down, give it to your accountant, and let them tell you whether it's good or not good. Let them ask you questions about it. Let them probe a little further before you just discount the legitimacy of it.
And a lot of self-publishing authors use print on demand without inventory, but some will print, 100 books or more to sell. How does that expense factor
Well,
in?
I think we're talking about inventory now. So you don't have to keep track of inventory for if your income's below, I think something like $10 million or something. So you could be a cash basis taxpayer. So if you spend $5,000 on books and you only sold 10 books, you've got all this inventory still that you could either not deduct as an expense and deduct it over time as you expend and sell those books, or you can just deduct the full cost of the manufacturing, publishing, printing of those books in the year that you spend the money. As a cash basis taxpayer, that's allowed. You don't have to recognize inventory if you don't want to.
Okay. Let's move into the live Q&A here, so we might jump around a little bit. We talked about this early on, and some people might have joined late. So if you're on a third year in a row of taking a loss on your Schedule C, should you take the loss, or will the IRS think it's a hobby rather than a business and audit? Third year in a row, but no, there's no benchmark. There's no official rule on that.
There's no official rule on it. And, it could be that you made $60,000 before your expenses, and your expenses were $65,000. So you lost money, but you still had a significant activity as an author. And so I would continue to report that activity, and hopefully next year your income is greater than your expenses. But just know that Schedule Cs, which is what we file our self-employment income on, tax returns that have Schedule Cs have a higher chance of being audited than tax returns that don't have Schedule Cs. And Schedule Cs with losses on a recurring basis have an even higher percentage. What percentage of these returns get audited? It's still ridiculously low. So if you feel like you're still a legitimate author and you're just having a hard couple of years, we should report the returns, report the activity the way you are allowed to, and make sure you keep good records. And in the unlikely event that you do get an inquiry, you should be prepared to answer the questions and come out okay. If you're a light sleeper and that doesn't sound good to you, then maybe you take a pass.
Can you refile previous year's taxes if you didn't take expenses, but now you got book money and you want to claim expenses in prior years? Is that easy?
Okay, so yeah,
difficult?
you can amend a tax return. So, but for the reason that you just asked about, I don't think that would be a smart idea. If you, I have a client that was one of the people I mentioned at the beginning that didn't deduct the commissions that they paid to the literary agent. We figured that out after we looked at the return from the year before they hired us. So we amended that return and took the deduction for the commissions that they should have taken, and they got a nice refund. But in the situation I think you just described, the person asking the question had no income in a prior year and wants to amend the prior year's return to take deductions for money that they spent as an author in that year, because now they feel like they're a legitimate author because they finally made some income in this year. I probably wouldn't amend a tax return to claim a loss on a Schedule C that wasn't filed in that year. That would probably be questioned and probably wouldn't end that well.
On donations, not like donating your work to a university, but donating books to like local schools. You write kids' books, you give them to local schools, or you donate books like that to a conference, festival, or school system. Is that a marketing expense or some other kind of deduction that you can take?
If you have the books Most of the time I see literary agents and authors donating books to institutions that are recognized charities, and they get a receipt and they take the deduction as a charitable contribution.
Okay. One little S Corp question. An author whose deceased parent was an author, they get, so that the living adult child gets the royalties. They've been having those sent to their S Corp. Is that a problem? And royalties from an inherited?
Is it a problem? It's a good idea. It probably has some pretty good tax results from it. I don't know if it really belongs there, but it's an interesting strategy. I can see why you would think about doing it, and you would try to figure out a way for it to be legitimate, but it might not belong there.
Okay. A few people asked about moving expenses. Are deductions for moving expenses possible for authors? Or
yeah, so moving expenses for people who are not self-employed are really specifically only allowed if you move for certain reasons for your job and a certain number of miles, and then they're limited on the standard on the Schedule A as an itemized deduction, and really not very beneficial. But as a self-employed author, if you are moving, the expenses that are associated with moving your author stuff, your desk, your bookshelves, your computer, all this, the cost of moving your business from one location to the other, I would say is a business expense that would go on your Schedule C with all the other business expenses.
Here's a creative question. If you're an author with a day job, can you count mileage on your vehicle driving between your job and home office?
That's commuting, sorry.
Yeah, okay. Let's see here. Someone asked for clarification. I have 2 books coming out this year. Can I carry over last year's research expenses for those books into the next year's expenses? Okay, I think we
Maybe
addressed that. Sorry, I've been working on my family memoir for 10 years. What happens if there's no income for many years? It seems to be a very common issue. Let's see. Robert, did you say it's often okay to claim theater tickets are a business expense if you work in media or as an author?
I would. I categorize it as research, media research, and that would be theater tickets, DVDs, Netflix subscription, all the other subscriptions that you spend money on to consume media and be relevant as an author. I would say yes.
This person says they've been told to add them all up, but only claim a few of them, a small percentage of them as expenses. I think they might mean to avoid, suspicion or being audited.
Well, that's good advice. I look at it another way. If you're going to use the category and create the awareness of it existing, if you have a number that's there and it gets picked up because you use that category, I'd rather start with the big number and work my way down than start with the low number and then still have to work your way down further. But it's very subjective. It's a subjective area. So it's on a case-by-case basis. It's a conversation that you have with your accountant, and you make the decision and take the position that makes sense for you. There's no right or wrong on this.
And to clarify about the standard deduction, one author says, I track my expenses individually every year. I go through receipts and plug them into TurboTax, and then I end up taking the standard deduction. Am I doing a lot of unnecessary work on these expenses?
Well, maybe. The standard deduction has nothing to do with being a self-employed author. So we all, whether we are self-employed or not, we all are allowed to either deduct the greater of $10,000 up to $10,000 of state and local income taxes, mortgage interest on your primary residence, and charitable contributions. And if those three things are less than, if you're married, less than $27,700, you're going to choose the standard deduction rather than what I just said. If those three things are greater than the standard deduction, you're going to choose those three things and itemize those deductions on Schedule A. The expenses that we've been talking about for most of this session are not those expenses. We're talking about business expenses that have nothing to do with mortgage interest, real estate taxes, and charitable contributions, which, by the way, are potentially ingredients in the home office deduction, but that's a different story.
So Schedule C deductions are separate from the standard deduction.
Yes, Schedule C deductions are business expenses against your business income, telephone, advertising, commissions, insurance, supplies, legal, professional, travel, entertainment, research. The list goes on and on. Those are business deductions. Schedule A itemized deductions are real estate taxes, state income taxes, mortgage interest, and charitable contributions.
Okay. Got a few questions from the international crowd. Do you have any advice about paying income taxes in the US if you live abroad?
Well, if you're a US taxpayer and you live abroad, you're supposed to file a US tax return. And if you qualify, if you spend enough time outside the United States, you qualify for something called the foreign earned income exclusion. And you're allowed to, you still have to file your federal income tax and you still have to report your worldwide income, but you're allowed to exclude from that income. The number changes every year. It's well over $100,000 now. But if you qualify and spend enough time outside of the United States or on a permanent basis, you can apply the foreign earned income deduction against your US tax filings.
Okay. All right, I think we've answered all that we can. And the rest would probably require some personal attention and research. But Robert, you invite Authors Guild members to send in questions so they can email the Authors Guild. You can use the contact form on our site or just email staff@authorsguild.org. Goes the same place to a human being who will read it pretty soon after you email us. And we can put you in touch with Robert for, simple question and answers to help you along the way. And I also would like to say that for some of the oddball situations, like donating your research to a university, a great place is the Authors Guild member forum, our discussion forum. It's basically a way to crowdsource advice from thousands of other authors. So somebody reading your question has probably been in the same boat. So that's another way to get advice specific to this niche. But Robert, thank you so much for being here. Thanks for all your wisdom.
Appreciate the opportunity. Good to talk to you. Nice to see you. Have a good evening, everybody.
Thank you. Take care.
Bye-bye.